Hi traders, welcome back to the channel with me, Fawad Razaqzada, Market Analyst with StoneX. Today we are breaking down what's moving the pound against the US dollar. So let's jump straight in. This morning we had the latest UK CPI numbers and it came in at 3.6% on the headline front, which was a bit hotter than expected, but still down from 3.8% recorded last month. Food prices were especially strong and that might keep the Bank of England's hawks focal at the MPC's next meeting in December. But CPI was never going to move the pound-dollar exchange rate this week. After all the focus was on the US side of things. We've got delayed September non-farm payrolls coming up on Thursday, which is very important, and PMIs are due on Friday. But first, we'll see the FOMC minutes from the Fed's last meeting and Nvidia's earnings later on today. So the dollar is subject to heightened volatility in the second half of this week. And ahead of these events, markets have been in a risk-off environment so far this week, and that's helping to push the dollar higher. Recent hawkish comments from Fed officials have also helped to push expectations for a December rate cut down to about 11 basis points, which is implying a roughly 50% probability of a rate cut. Looking further ahead, all eyes will be on the next week's UK budget, which is shaping up to be the key event for UK markets. The spotlight is firmly on Chancellor Rachel Reeves. And markets want one thing from her: fiscal discipline. But will she deliver? Investors are nervous. We've already seen the pound weaken and bond yields jump. But the key question is whether this move is UK specific or part of a broader global rise in bond yields. What really shook UK markets was news that the government may scrap plans to raise income tax. If reports are correct, that leaves a £30 billion fiscal hole, and no one knows how it will be filled. The Chancellor will need to reassure markets next Wednesday, otherwise we could see more downside in UK assets. Technically, the big zone is 131 to 131.40 on the cable. Earlier this year, that area acted as a double bottom, but we broke below it in early November, and since then, the pound-dollar has been bouncing around this range without a clear breakout. If the bulls can hold above the zone, then 132 and 132.50 become the next upside targets. But if we break down again, then 130.50 and 130 are the next likely stops. That's your pound-dollar update wrapped up. If you found this helpful, hit the like button, subscribe, and let me know in the comments where you think the pair is heading next, up or down. See you in the next one.